Hello traders and welcome to another video review. Today is Friday, November 10th, 2023. Let's find out what is going on the Forex economic calendar today. We got some data that had been published already in form of the GDP from the UK, and those data are one of the most important data for today. As you can see, for the third quarter, the GDP is slightly better than expectations. It beats it on 0.1%. It doesn't matter what kind of a time period you take, so kind of a better than expected data, better for the pound, but this is not a big surprise. What else do we have from the UK? We got the industrial production and manufacturing production data that were published together with the GDP. As you can see, they were worse than expected. We got the data from the US coming through at 3 o'clock. We got the FOMC member Bostic to give a speech. We got the Michigan 1-year inflation expectations, consumer expectations and consumer sentiment data from the US at 4 o'clock. 20 past 4 o'clock, there is a German Buba president who will give a speech, Joachim Nagel. Then we have CPI data from Russian Federation. Then we have US Barker Hughes oil rig count and total rig count data from the US scheduled for release at 7 o'clock, and at 8 o'clock we got the federal budget balance from the US. So basically the most important data of the day had been published already in form of the UK GDP. So let's find out what is going on this market. We will start on the euro dollar, and the euro dollar is of course still very important, in very important place because it's keep testing the level of 1.0559, 1.0560, which is the technical support, the last in a row of the technical support, and it looks like we reversed straight from the 1.0726, dive below 50 periods moving average, and now we are testing this level. The local low is 1.0657, so it's 2 pips lower than the technical support. Nevertheless, there is still this trend line support for the disposal of bulls. We can go as low as, I guess, 1.0640, and then the reaction must be done, because we either bounce from this level and go higher eventually, or of course this is the level that can make the very nice spike to the downside. Let me just extend the channel. Maybe something like this would be good, and the lower channel line around the level of 1.0555 will be tested then. So the situation on the euro dollar is quite simple. It all depends how the internal trend line will be played out. Momentum wise, we are below the level of 50. We are the indicator is pointing to the downside, to the south, so generally bears are in charge of the market, and bearish pressure should be expected on the euro dollar. Let's go back to the British things and the British pound. What we see here is again the very nice reversal from the highs at 1.2427. We moved lower towards the level of 1.2241, then bounced and then broke below this level. This level of 1.2241 will act as an intraday technical resistance, and the trend line that was hit around the level of 1.2212 will act as the technical support. Of course, there will be problem for the bulls, because they need to break above 1.2227, which is the 100 periods moving average on a 4-hour chart. So we got 2 technical resistances on a 4-hour chart and intraday chart, time frame chart as well. So in case of a breakout lower below the blue trend line, the next target is 1.2220, which is the technical support, and if this technical support is broken, then we go lower at 1.2092. Momentum wise, we just went lower towards the level of 40, so we are below the level of 50. The momentum is weak, the momentum is negative. The bears are in total control of this market, at least in the short term. And please notice the fact that if we break below 1.22, then of course this momentum might even deepen the move to the downside, which means there is a room to the downside on the momentum. There is a room to the downside on the chart. It all depends how the upper internal trend line dynamic support will be played out by the bulls and the bears. We are talking about this area here. It all looks rather bearish for now from the technical point of view. Let's find out what's going on the Bitcoin. The Bitcoin is particularly interesting for us because we are interested in nailing the top on the Bitcoin of the recent rally. Okay, so we hit the level of 38,000 already, and then the market reversed sharply, made a local low here at 35,594. So as you can see, only this movement here, where is my price range? There you go. Only this movement here, okay, is minus 6%, and it was made in 4 hours. So very nice spike to the upside was made, fine, but then the market reversed, and then of course bounced, and as you can see, it stopped in the middle of this range, just above the upper channel line. Nevertheless, we still have the bearish divergence, which is now even more apparent and clear than it was before. Market is doing another swing high. Momentum is not doing any swing high. This high is lower than this one. So the pullback is due. We might risk the statement that the pullback will go back inside of this channel, and if there is still no breakout out of this channel, we might expect this market to go up again after some period of the consolidation, after the market will actually play out this situation here with the momentum. So if we keep moving here like that, you can see we went from the extremely overbought market conditions towards the level of 43. Right, but the momentum was the price was still doing even marginal highs during this movement. Okay, and the same price action is expected here. The momentum will have the time to go lower towards the level of 50 or maybe of 40, and then the market will be ready for another spike to the upside. Let's find out what's going on the crude oil. As you can see, the 4-hour chart of the crude oil, let me just take a look at the daily. We got another, there you go, we got another level here. Okay, it's not important. That's 61% of the Fibonacci retracement. Let me just remove it because we have it on the market on the chart already. So let's switch to the 4-hour chart back on. So what I wanted to tell you is that we hit the 61% of the Fibonacci retracement exactly at the level of 75. What's that? 75.01, and then we bounced, but only towards the 50 previous moving average, right? So it's clear that this moving average was rejected. The price was reversed lower. We got the confirmation, but we are trading inside the extremely oversold market conditions. This is the zone below the level of 30, so the local low was 20, so that's pretty oversold. And as you can see, if we just zoom out right now, we can change this level of 77.43, 78.15, and of course 78.74, and now there are the technical resistance. Okay, so the market will be playing this area here between 75.02, 78.71 to bounce towards the level of 50 first. If you can see the momentum on the 4-hour chart, it's obvious that if we place this line here, you can see that from the lows of 83 we are not able to break above the level of 50. Okay, so the market keeps moving lower. So the the bulls are gone from the oil, and the bears are in total control of this market, and we should expect another push to the downside after the pullback or correction towards one of these technical resistance levels is completed on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.